Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo, here with my co-host, Jeff Walston. How's it going, my friend?
I'm great. Excited for the week to be over, and the weekend to begin, but definitely excited for next week as I'm starting some more projects and developments down the road. So what about you, Raphael?
Yeah, sure. Definitely the same way. I mean, this week's been pretty hectic. I was in Arizona visiting my family last week. And, although I did work during the week, I tried to, take a little bit of a step back to just kind of unwind and just spend time with my family that I hadn't seen in a long time. And so just kind of catching up on everything. So this week has been somewhat of a blur, and I'm sure next week's going to be very busy as well, but that's always good. You want to make sure you're always busy and trying to serve your clients the best you possibly can. So yeah, it's been a great week. And speaking of a great conversation, I definitely don't take this lightly. We had a phenomenal conversation with George Pino. He's actually a partner at Commercial Brokerage International. It's a brokerage firm, and they own assets as well, commercial assets in Los Angeles. His business partner, Joe Killinger, produces a ton of phenomenal content on YouTube, and I actually got connected with Joe, and that's how we got in contact with George, who is in fact his partner. And during our conversation, we had he shared a lot of great insights pertaining to commercial real estate, in particular as he got started in the business. He kind of talked a little bit about how he got in the auctioning space early on, had a lot of experience and success in that field, and then eventually went off and joined a residential firm to start their commercial division in the early 2000s. It kind of grew from there and then branched off and did it on his own. We talked about some of the biggest challenges and mistakes that investors make when it comes to commercial real estate investing and looking at opportunities, and kind of just getting very narrow-minded as opposed to taking in a lot of data points to consider what's going on as in totality. And then we also talked about corporate social responsibility through their asset management company. They really try to target assets that can have a huge impact on the society as a whole, and not just look strictly at the profits. Although the profits are important, understand that as a corporation, as a business entity, we also have to have that corporate social mindset in place, meaning that how is this investment and how is our taking care of this property and really nurturing this property going to affect the broader community as a whole. And then we talked about some of his efforts in various other things, including social media and LinkedIn, et cetera. And then finally, he shared some advice that he would share with his younger self to those just getting started in the industry, whether you're a broker, investor, or really anyone in the space. It's important to be able to, take his advice at the end of this podcast. And I think you guys are going to gain a lot of value from it. So Jeff, do you have anything else you'd like to add?
Just to everyone listening, George has several decades of knowledge and experience that he's gained from all of his years in commercial real estate. So I can't wait for you guys to listen to this episode.
Definitely. No, for sure. And again, I also want to shout out to everyone who's been listening to us. It's really amazing and humbling to see the amount of downloads we've been getting for our podcast. If you guys are listening to this in a podcast format, we would greatly appreciate it if you could leave a 5-star review. I think that's a big reason why we've seen an uptick in downloads. So again, take a second right now, go to whatever podcast medium you're listening to, drop us a 5-star review and a comment. We would greatly appreciate it, as it does make sure that more and more people can hear this message. If you guys are watching this on YouTube, give us a like, subscribe to the channel, make sure that you follow us on a day-to-day basis, because we really do take a consistent effort to find the best possible guests to be able to interview and draw out insights for you guys. So again, without further ado, let's go ahead and dive right into the podcast. Well, hey, George, great to see you this fine morning, or it's morning for you and afternoon for us.
Yeah.
Absolutely. Thanks for having me, Raphael and Jeff.
Oh, for sure. No, and we were talking before we went live, and I mentioned to George that I'd actually conversed with his business partner in the past. I was on his YouTube channel, and obviously I'd learned about George through Joe and following along with his content. And so I thought, with all the great content that they produce, I mean, I'm really excited to kind of dive into your story and learn a little bit more about the things that you've done in your past and some of the lessons you've learned so that we can add some value to our audience. So again, welcome to the podcast.
Absolutely.
Awesome.
Looking forward to it.
No, for sure. So when we first start the podcast, we like to learn a little bit more about the person that's across the table from us. So if you don't mind, kind of tell us a little bit of who you are and what you do.
Absolutely. George Pino, CEO, Commercial Brokers International. We also have an investment company and a asset management company, Pono Asset Management. And, I've been in the real estate business now for 34, coming on 35 years. Right out of college, went to school at USC, stayed out here, for the most part, grew up in Orange County. Father was in the military, we moved around quite a bit then, but most formative, probably years, high school and whatnot, were down in Orange County, and kind of stayed in Southern California from there. So, we started off doing real estate auctions, and then kind of started investing early 90s, mid 90s. And when I was about 25, 26 years old, and just started growing it from there. We opened up a commercial real estate division for a residential company out here in Los Angeles back in 2000, broke off in 2005 and started our own company. So been here for 16 years, actually about to move next week.
Wow.
Getting a little bit larger
Nice.
office.
There you go. That's awesome. Go ahead. Good.
Yep.
That's awesome.
Yeah,
Go ahead. Go, Jeff. We keep interrupting you. Sorry.
it's good. I was just going to say that's great that that we're growing. Businesses around the country are growing, and I like to see that and hear about that, especially during this COVID and all this stuff. So that's great, George, that you're doing that. So.
Yeah, I know for sure. And I'll even say that with the military background, my dad was in the armed forces as well. He was in the Air Force. So I can relate to the traveling. I mean, I lived all across Europe until I was like 14 and then moved over to the United States. So it's just one of those things where, you never get too comfortable in one place because then you'll get moved within the next couple of years. But
Absolutely. Absolutely. That was all pretty much all my entire first 10 years, 12 years of my life.
Oh yeah. But it helps with adaptability too, I feel like. Cause again, you're forced in these situations where you just, you make your friends and then you move and then it's like, oh, well, if if I don't make new friends, I'm going to be that weird kid. So it's like one of those things where you kind of always have to adapt, always have to, kind of get out of your shell a bit. And I was naturally introverted when I was a kid. I definitely was not an extrovert by any stretch of the imagination. I think that those experiences kind of pushed me out of my shell because I was forced to. So.
Absolutely. You kind of have to, do that, especially when you're moving around every couple of years. I think it's a little bit of the best of both worlds as a child as well, because you also start off as not only do you have to adapt, but it's, even though you're in a large or member of a large institution, it's really a small town. Those Air Force bases are small towns essentially. And so everyone knows each other. So you kind of grow up with that hometown feeling, that hometown mentality. Everyone looks out for one another. Kind of, your word is is what's important. Your handshake and your word, and that's it. And but that's kind of growing up. But at the same time, as opposed to just being in a small town, you're moving from small town to small town, so to speak, from base to base every year or two. So really creates that adaptability as well.
That's awesome.
Yeah. So George, I'm actually curious. Within your story, was there a person or something like a book, or what got you interested in commercial real estate? Was there a particular event or something, or can you explain that?
It was more of an evolution, I would say, than an actual particular event.
Sure.
And, when we initially started purchasing, I grew up, and when I say I was in a military family, my father was enlisted, 30-year career, World War II, Korean, Vietnam War. He wasn't an investor by any means. He was definitely your, blue collar type that sat there, and he never really gave us growing up investment advice because they were a lot more conservative, almost cash under the mattress kind of people. My parents were, and from there, after I went to college, I started looking. I knew what I wanted to do. I actually went to college originally as a computer science major, but then realized I didn't see myself doing that. Behind a desk all day, kind of just punching numbers, so to speak. which is a lot of my job now, but but a little bit different. You know, I wanted a little bit more of that entrepreneurial route. And a friend of mine actually asked me to help out at a company that he had started at that was a growing company. And, you know, it was supposed to be temporary work for just 2 weeks. Got a permanent job offer, turned into a 6-year gig. But at that time, we were doing real estate auctions, but primarily looking at investors and a lot of the other type properties. So I started seeing investors, what they were doing, how they were acquiring the properties, what they're looking for, and things like that. And it really started getting me a little bit more interested. I do wish that at one point someone had told me, because I was making some really good money as a person right out of college, that, you know what, instead of running around enjoying and spending all of it as a 22-year-old is likely to do, that I should be investing some of that and holding on to it. But you know, hindsight's always 20/20. And then from there, we started buying. My business partner and I started buying properties. We started buying bulk residential properties to flip. And then we started buying multifamily assets to get into it. You know, our first purchase was a 10-unit apartment building in Los Angeles, and then a 6-unit. And then we started going after a little bit larger properties, a 23-unit, 28-unit, 52-unit, 72-unit, 292-unit property in Texas. So we started looking and acquiring different properties, but then once we started building the commercial real estate division for this gentleman back in 2000 that owned a residential real estate company, he said, you know, he was a mentor of ours, and a couple things that he had said to us, although we were already investing in multifamily, you know, one of the things he always said was, if you're going to talk to your client or speak to your client about an investment, you know, you should believe in that investment and be investing as well. If that's what you're promoting and pushing. And, you know, the great part about the brokerage side of it was that we were able to learn off of other people's experience and still get paid for it, but really watch what they're looking out for. So, you know, as our clients grew from from your mom and pop investors to more institutional investors and developers, we started seeing what they're looking for. We started doing working with the leases and re-tenanting and repositioning the properties. So we were able to actually tell how to add value to the properties. And that's when we started buying commercial real estate. So started transitioning. We've actually now sold all of our multifamily and just been buying single tenant net lease assets. Just closed on 2 probably late last year, but more July-ish.
That's awesome.
July, August.
Yeah. That's phenomenal. And I want to pick out a piece of advice that you shared, which I think is crucially important, is the, you know, being invested in what you're kind of pitching as well. I mean, I can't tell you the difference in conversation you have with a client when you say, oh, by the way, I have a property, then this is what I did with my property. This is why I was able to increase rents here, or I was able to modify this and reduce expenses. And this is why I believe in what I believe in. It just helps so much with that piece. And I have a small multifamily property here, and, you know, I've done some multifamily this past year. And I also, you know, Jeff and I also focus relatively, we're looking in retail and industrial, and that we're looking for that first acquisition as well. And that's going to make a difference when we start interacting with these types of individuals to say, look, we're personally invested in these types of properties. This is why we believe in it. And this is what you can do if you're interested. So I think there's just a different conversation. There's a different trust factor when you do, in fact, invest in what you say you're pitching. So.
Absolutely. And then also you see a lot more of the back end of things after you know, not just the transactional side of it, but the back end after you acquire it, what steps to take, you know, how to position it, how to set yourself apart. But also, you know, one of the things that we always do with our commercial properties, whether there's 5 years remaining on the lease or 10 years remaining on the lease or 15, is as soon as we acquire it, we're already looking at our exit strategies. So we're already putting together a compiling list of, you know what, just in case something happens to this tenant, it may be a corporate guarantee tenant. It doesn't mean they're not going to go dark, or, you know, they may decide to close that location. What doesn't really matter. What really matters is the location. So we actually start, you know, delving into it, creating a list of potential tenants in case something happens, what we can do, and start forecasting like, well, when is the best opportune time to re-tenant or go up to them to potentially reposition or even buy them out of the lease. So,
oh, for sure. Yeah. That's an important piece in particular in those, corporate tenants, because, there's certain tenants out there that are paying a super high price per square foot that you may not be able to replicate in the open market. So it's one of those things where you do have to have that analysis piece in place and say, okay, is this replicatable if they were to possibly leave? And it's maybe if it's a prime location in somewhere like in LA, for example, maybe they're paying under market rent. So you're kind of almost hoping that at a certain point in time, you say, okay, well, if they leave, that's phenomenal for me because, I can significantly increase the value of this property by now bringing the rates closer to market. So yeah, I mean, that's a smart strategy.
Yeah, absolutely. No, there are a couple properties that we purchased that we're hoping that they would leave or would have left.
Yeah, I know. There's this gentleman named Aaron Zucker, who's a retail investment gentleman, and he had this property that he bought, which was like it was a out parcel of this, on in Dallas, I believe, and there's like a Mexican cantina restaurant there, and they're paying way under market, and he bought it at a good rate as a result, but they're just literally waiting until 5 years from now where the lease runs out and they can jack up the rent 2.5 times or whatever. So it's just
absolutely, exactly. I mean, and a lot of that just goes back to the old fundamentals of real estate. It's location.
Yeah. Well, I actually like what you said earlier about what I picked up was the mentorship that you got, and then gaining your real life knowledge from like the investors that you guys were helping out, and seeing how they went about and analyzed properties and kind of looked at the whole scope of everything. And I know I like that aspect of it. It says not read it from a book, you're actually getting it from a person and gaining their knowledge and from their experiences. So I really like that part. But
so speaking of the mentorship piece, and really just when you first started out, I mean, there's some early challenges involved in the business. I mean, it's not an easy business to be in, as you were well aware. You've been in the business for a long period of time now, and you probably mentored a lot of people through it. So could you kind of talk to us a little bit about some of those early challenges that you faced and how you were able to overcome them? Because there's a lot of people in our audience that are commercial real estate agents or people who are just getting into the business, whether that's on the investment side or the agent side, and having some advice like that I think would be helpful.
No, absolutely. And, I got to say that I was actually pretty darn lucky. Number one, the times have definitely changed. Number two was, in the early parts of my career, a lot of my success was probably attributed to being young and dumb, to be frank with you, and lucky. And I was the first company I was at. They were doing real estate auctions, but they were a national company, and I was assigned Texas as my territory, and that was their largest territory. And they were selling 2,000-3,000 properties a year just in Texas, and I was in the closing department, and I ended up getting transferred in, and then eventually the company was growing so quickly. I ended up running the closing department after about 4 years. But I opened up offices for them in Dallas, Houston, Boston, Chicago, and up in Pleasanton, California. And one of the things when I was going about it, a lot of it was, to be frank with you, just trying to put it together. But I also took any meeting I could with because of who I was. Here I am, a young kid out of college, and I'm assigned to this. I'm actually working with the senior VPs and executive VPs of most, like Texas Commerce Bank, First Interstate Bank, Freddie Mac, Fannie Mae. So I got thrown into a very corporate environment out of Texas, and I just started. The one thing I learned is that, or two things I learned. One, people like to talk to people they like, but they like to do business with people they trust. So, I used the skills I got in college and from traveling around on the military side to actually try more of a friendship, kind of break into that barrier, even though I was a lot younger. and then I just picked their brains on and saw what they were doing and what they wanted initially. And then after that, we broke off and started a real estate auction company that within a year and a half became the #2 real estate auction company on the Western region. I'd probably venture to say that it was maybe #2 in the nation. It'd be really close to that. But we started off. This was back in the '90s with something called microfiche. So a lot of people don't even know that it's microfilm. So there was no internet really. That was the internet was around, but it wasn't capable. So it was all just a lot of hard work. Put your nose to the grindstone and do it. And it was all about outperforming the competitors. And with that, we started learning. We weren't giving much tools, but we're given a lot of trust to operate and do this. And a lot of it was just force of will. Our first true mentor that we got was the gentleman that we opened up the commercial real estate division for, and we learned a lot. He still is a mentor of ours. He ended up selling his company to Sotheby's for quite a bit of money. He's actually starting a new company now, a new residential real estate company now in Los Angeles that I think is going to be a large force. But watching him see and grow and how he was operating was really mentorship on that. Now also having, even when we have ideas now, we can just give him a call, meet for lunch or pick his brain over the phone. And, there's some great ideas that we've taken to heart and incorporated both in our brokerage side and our investment side as well.
That's amazing. Yeah. And it speaks to Jeff's piece of the mentorship. I mean, again, I've had many mentors in my life, and I'll continue to have many mentors in my life. And I try to look to people that I see qualities in that I want to replicate in my own life. And those individuals are the ones you should aspire to be on a regular basis and surround yourself with. So that's awesome to hear that you had that in that moment of your career.
If you don't mind, I'm going to pitch somebody a book real quick. I normally don't do that, but there's a book specifically about this called Curve Benders. Would highly recommend reading it. It is actually about how certain people you meet in your life, mentors and whatnot, will bend the curve of your career and change the trajectory a little bit more by their mentorship. And it's a matter of, the book goes into a little bit about also how to find them and how to work with that and how to deal with that. I highly recommend it for anybody.
That's amazing. Great advice. Yeah. Or great share.
Yeah, for sure. So one of the things that I think a lot of us want to know, so we don't have to go through this, is what are some of the biggest mistakes like investors make when they're analyzing commercial properties that you've seen? Is there something particular that stands out, or?
The most common and biggest mistake is that they tend to be there's two of them, but the most common one, they tend to be, a lot of newer investors tend to be focused much more on the actual return than the property. And what I mean by that is, yes, returns are important, but what people have to realize is that there is such a thing called risk versus return. In that, the higher the risk, the greater the return, in theory, as any investment should be. So when you see a really high rate of return on an investment, it usually is an indication that there may be some risk involved. And whether it's because of the location, the lease term, the tenancy, whatever the reasons may be. And a lot of investors just get focused on that one number, saying, I want this 6 cap property. And why would I buy this other property at a 5 cap when I can get this at a 6? And the fact is, the other property may have other. It's maybe a little bit safer. It may have more opportunity and things, and you haven't really looked at that. So I think that's the number one mistake. The number two mistake for most mom and pop investors is that, I think a lot of them look at the investments and they almost kind of fall in love with it, so to speak. They, it's completely different than real estate, or rather than like stocks. Stocks, yes, they are tangible, but they're not really tangible. Real estate's a tangible asset they can go and visit and see and touch and feel. So you never see investors sit there and say, I remember when I bought this stock and, I'm keeping it because I love it and it's really performed well. No, they're constantly evaluating their portfolios. And, I think the issues with real estate investment, there's so many benefits to real estate investment and just the tax benefits alone can make it outweigh a lot of things. But when people don't look at their investments and analyze it, it may not be performing as well as possible. For instance, we talk to investors all the time that have had a property for 20 plus years and they've completely depreciated it, or almost, and even if just exchanging and increasing basis, even if the net income's the same, the cash in their pocket is going to increase substantially just from the tax benefits. So it's a matter of really looking at and evaluating the whole thing, and don't look at it as I own this property, I love this property, as opposed to, this is an investment. Is it performing better than what I could do elsewhere?
100%.
And I think that's the one thing people don't do.
No, definitely. And again, it's a much more in-depth analysis than just the surface level of, what's the cap rate, because again, the apples to apples comparison.
Absolutely.
And there's other things to invest in besides just real estate. So, doing that comparative analysis and saying, okay, well, based on my risk profile, based on what I like to do, based on the level of passivity that I like, based on all these other factors that are external to just, this in particular, investment type, is this right for me? And then once you get to a point where you determine that real estate is right for you, then you got to say, okay, what are the opportunities out there? And then really dive into them, and not, like you said, get tied to one thing. And, I've worked with investors like that too, where it's like we get into a situation where they really like the property, and you get in a bidding war, especially in this type of environment where it's just so crazy. There's so much money out there. And when you're looking at properties like multifamily or industrial, I mean, it's not uncommon to have, actually, it's pretty much going to happen. You're going to have like 8 or 9 people just bidding this thing up, trying to get it. And, it's kind of stepping back a little bit and say, okay, is this worth it in this situation, or am I just getting too emotionally tied to this opportunity? So.
No, absolutely. People always call about properties that we have, and I ask if we're looking to sell them. And my typical response, because we typically create an investment horizon of how long we're planning on holding a property and what we're doing. And I always tell anyone who calls me is interested in one of our properties that, what, I'm not looking to sell right now, but I will consider selling for the right price and opportunity. Absolutely. And that happened actually with one of the last property we just sold in Texas. Was a 17-unit apartment building that we were going to. We were going to tear it down eventually and then build about 30% more units. And then all of a sudden last year we started getting unsolicited offers that we were like, well, and they were all catching our eye because all of our profit was already built in. And so I thought, we were like, you know what? Let's sell this now. Let's do it. And so we did.
Amazing. Yeah. And I'm sure getting unsolicited offers, and especially I'm sure the numbers you were getting were probably you're just like, whoa, okay, maybe it's not worth it for me to go tear this down and go through the headache of redeveloping and all this other stuff. Like, you save years of your life as opposed to gaining an extra, I don't know what the profit margin would be on that, but I mean, it's just the stress and time involved with that. So.
Yeah. No. Most of our profit was made. I mean, it made no sense to hold on to it and try and sell. And that was the analysis we did when we finally got there. I'm like, well, okay, sure. I don't know why you're paying it, but I'll take it.
Hey, as long as you get it, that's all that matters. If they can make it to the closing table, it's like, now it's your problem. So that's awesome.
Yep.
So one thing you mentioned was the asset management piece. And I think a lot of people that get into the commercial business eventually want to hold assets, right? I mean, I think you're doing yourself a disservice if you are in the brokerage business for a long period of time and you don't own property. I mean, that's something that I just don't understand. And you mentioned, I think your Pono Asset Management, is that first off, I'd like to talk to you a little bit about that. And is that a property management arm? And then what's the investment thesis about what you're actually doing?
Well, we had a property management arm and division because we took everything in house with a lot of the properties. But when we're switching over to commercial, we realized that we could do a lot of cost savings on that because it wasn't the staff wasn't needed. Multifamily tends to be very labor intensive. You need to have a lot of people involved in management of it, especially larger assets. One of the properties we had, I think we had 12 employees just on one property. So it started changing that part of it. We actually ended up selling off and getting rid of the property management stuff right during COVID, because we knew it was just going to be a headache. And the first thing investors are going to do is start cutting property management to save money. So we did that. We had a couple of initially when we got into multifamily investing, we had a company that was our holding company for that. That was Learning Link Centers. It was a socially responsible real estate investment company. Everything that we try to do, whether on the brokerage side or on the investment side, we always try to give back to the community that we're in. Actually, and Pono Asset Management, or Pono, the word Pono, it's actually a Hawaiian word that no real English translation, but the best translation is to do the right thing. And, so it's like, well, what are we going to do? So, a lot of what we do and look at is what can we do to help improve the community? And from what we've learned in our real estate and investing experience is that, if we can improve the community, then it's a win-win for everybody, because it also improves the value of the property that we have, and it improves the lives of the people in the area as well. So, we're very picky about what we kind of try and do, what neighborhoods we go into, and how we work on that and try and coordinate all of that.
Yeah, that's amazing, really. And really the serving the underserved is, in general, is going to be, like you said, great for a community as a whole and for the business community as well. Because one trend that's, kind of constant, I'm assuming, throughout the United States, is these sectors of the cities where there's just not a whole lot of investment going on. And so that causes a lot of problems from a societal standpoint, and also from a human standpoint. The people living in these communities that often don't get the level of investment that they probably should. And so having the being deliberate about it is almost what you have to do, because once one domino falls, it starts to eventually kind of build on top of each other, and you can, really make an impact on many people's lives, which, again, I think that's part of the reason why we're in the commercial real estate. We want to we want to have an impact. We want to be able to impact the growth of our cities, regardless of where you're at in the country. So.
Yeah, no, absolutely. And it's always ever growing and changing. That's the one thing I love about the commercial brokerage stuff. We're working on quite a bit of things within in-house here on the brokerage side. Everything from electric aerial air taxis, infrastructures throughout Los Angeles, which is great because, we've actually been working on it for about 4.5 years. 4.5 years ago, if you talk to people about it, and they never would have understood or heard, or didn't even know, that it was being considered, and that, eventually it'll end up being like a drone, the pilot right now. So I love that, to be able to see how it changes the community, see what we can do to bring in other investments. But, the commercial brokerage is fantastic in that, although it is a little bit slower to change things as far as because a lot of times the rents and the leases are long-term, you inherit them when you buy them, you can have a big impact within just the community itself.
Definitely.
Yes. And speaking of impact, I know that you've been doing a brand building for your business and stuff. And how big of an impact has that caused, when you guys are doing all your efforts towards building your business?
Probably not as much as you would think. When we initially started the first company, Learning Link Centers, a socially responsible real estate investment company, we actually went into that thinking, what, we're going to do this. We're probably going to get a little bit lower of a return, but there are people like us with the same mindset that want to do this. And those people are hard to find when it comes to actually putting your money up.
Yeah.
Even like the banks weren't, the banks were interested in the concept and the business, but they weren't quite interested. So, and then we had proof of concept, but more importantly, what was actually kind of interesting is one thing we didn't calculate was, we were able to stabilize the communities that we're in by bringing our services to them on the multifamily side. where and all of a sudden our make-ready costs and our maintenance costs dropped down dramatically, to the point where even though we were taking some units off the market to offer services for our tenants, we actually were making a better return than we had anticipated. So even at that point, we had some investors then starting to look. We had a couple of copycat larger investment companies come in that we partnered. We partnered with a couple others as well, but I think the issue is that if you're going to do something on a socially responsible scale, you have to be committed to it. If you just do it for the sake of trying to bring in investors, one, it tends to backfire because a lot of the communities that you're in realize you're just doing it for money and not for them, and that tends to be a kind of a pushback. But when we actually entered this and did this with the thought and concept that what, we're actually going to make a little bit less money, but we're just going to do it because it's the right thing to do. And that was actually a pretty good lesson on that, where it could be structured in a way so that it was a win-win situation for everybody involved.
It's amazing. No, and again, it just goes to show the corporate social responsibility, because there is one thing to be said about making profits for shareholders. I mean, that's an important part of capitalism. I think it needs to be done because, again, capitalism in general, if you look at it across a broad spectrum of time, is the most efficient way to allocate resources. However, we do have a responsibility as corporations and businesses to really think about how our impact is on the broader scale and in the community. And so, being deliberate about that and reminding yourself every single day that, yes, you could eke out every single cent you can out of a situation, but in reality, is that the socially responsible thing to do? And if it's not, then you need to realign with your values and say, look, man, this is not a good opportunity. So.
Yeah, no, absolutely. And there's so many benefits when you actually go into the community and you take care of the buildings and the areas and the properties, because other owners now that are looking to potentially retire that may have pride of ownership in those buildings, they actually seek you out, say, are you interested in this? We see what you've been doing. Your properties tend to be a little bit more in demand, so to speak, where you have less time to lease up, and or even waiting lists, which is what we had on a couple properties. So and this was a community where, in an apartment side, one of the things that we like to track for transition in the area is the attrition rate for the elementary schools. Because generally speaking, middle school and high school, the attrition rate some of it can be attributed to people dropping out of school. But in elementary school, most elementary kids don't drop out of school. So if they do drop out of the school or change schools, it's because they move. And in this particular community that we started investing in, they had over a 43% attrition rate, where on the elementary school level. So 43% of the kids that started the school year didn't finish the school year. And really, that can only be attributed to them moving, for the majority of it. And, we went into that with the expectations that, this is what we're going to have: high turnover rates, high make-ready costs, high maintenance costs. And, after we started the program, about a year or so into it, and they realized that we're doing this and we're doing it just because, all of a sudden people wanted to live there and they wanted to stay there. They saw the benefit that was for their kids, and whatnot, in the programs that we were putting in place. And, it literally, in Los Angeles, our yields were 16+%. So
nice.
It's amazing. No, and it goes to show that, if you're committed to it, and that's the piece that you mentioned. If you're really committed to it and you stick to it for a long period, it can be beneficial for all parties involved. So that's awesome advice. So one thing related to advice, I mean, again, as part of our audience, we have definitely experienced people that listen to this podcast, and those individuals who've been in the business for quite some time, but we also have some younger brokers or lenders or investors that listen to the podcast. And so I was kind of curious if you could provide maybe what piece of advice would you give to someone who's just getting started in their, brokerage, investment career, et cetera, if you could go back in time?
Treat it like a business. If they're starting especially on the brokerage side, you have a lot of brokers that come into it thinking that it's almost like a part-time job or so. I can tell you that every successful agent I know that's making 7 figures or more, they're spending, 10, 12 hours a day at the office. It is a business for them. They have a team. They have a structured plan going forward. Same, I think, would go for the initial investor is the same thing, is create a business plan. I mean, you don't normally see business plans for investments. We call them more like an investment horizon and what you're planning on doing when. But at the same time, it's the same concept. You want to have a plan. If you don't have a plan to succeed, then you have a plan for failure. And, the plan doesn't have to be perfect. It can be, but you should have a plan of what you're planning on doing and what actions to take when something may happen. And, this way it makes it a lot easier for you going in. I would say that. And then the number 2 thing I would say is people just getting started off, make the wise choices on the investments, but also if you're a broker wanting to start investing or getting in, save until you can. Do it, and don't keep putting it off. There's an old saying in the brokerage community: when does a real estate agent retire? When they die. Because usually, or not an old saying, old joke. Because usually a lot of generally speaking, most real estate agents, it's a feast or famine business. A lot of times, it's they're especially when they're starting off, they're starving for the first 6 months or so. Then all of a sudden they get a couple of big paychecks. They spend it all. The mindset is, I've been working so hard, I haven't been making money. All of a sudden I got this big windfall, $100,000 or whatever, and they spend it off on toys or whatever and whatnot. Save and invest. That's going to get you the longevity in the business as well as the longevity for the investments.
Great advice. Awesome.
Nice. Yeah. It is really amazing advice, for sure, for especially people starting out. That I can't tell you how many times that Raphael and I both come across someone that's just starting out and they have all these questions and stuff and they're seeking that advice. They just don't know where to go and get that. So that we really appreciate you giving that, because this is another resource we can send and maybe they can reach out to you. But earlier you were talking about a book that you read and that could actually be impactful. And another question would be, what was one of those books that like maybe changed the trajectory of your career or just in your life in general that you've read that you can maybe give to us? And
I'm going to throw out a book that I recommend all the time, and it is the silliest, easiest read. It's literally about a 2-hour read. It was written in the 70s. It's still required reading for a lot of business schools. It's called How to Lie with Statistics. Okay, because everybody hears, numbers don't lie. Numbers don't lie. Well, the bottom line is they may not lie, but they can paint a different picture. And, it's all how you phrase things. It's all how you look at things. So what I loved about this book was not so much of the fact that showing that, how to lie with statistics, but it was more about how to question and look at things, and not just when it came to the investments, but in life in general. If you take that in, it's like, well, and we're a little off topic, but I think this is an issue that we've been seeing especially the last few years, where, people are headline readers and, they don't question them. They get their information a lot of times on social media, which is geared toward what they're liking anyways, and then they don't question it and actually go in and think about, what does that make sense? Is that something that would really happen? And this book actually gives you that mindset that you should be questioning everything, whether you agree with it or not. Just, look into it, verify it, question it, and figure it out. So, that's what I love about this book.
That's amazing advice. And
Yeah.
it's from the engineering standpoint. I mean, like I said, I studied engineering in college, and the scientific method and validating things that you come across when you're looking at data. Because I've read a lot of white papers, and there's sometimes where you read something and you're like, their assumptions on this are very like optimistic, and you're like, and they're drawing these conclusions based on all these assumptions that are just like way out of line. And so, you know, again, just because the data may look pretty, the graphs, you know, make it seem like there's something that's very much a problem, or maybe very much an opportunity. It's very important to question that and really get a multivariate approach and say, okay, well, what about in this scenario? What about in this scenario? And that's what I credit that mindset piece to my background in software. I was in software consulting for many years, and that idea where it's like, oh, well, you know, I designed this piece of code, but let me try like 14 different scenarios, see if I can break this thing. And if you break it, it's like, okay, well, this didn't work. Okay, let's modify that and then maybe make it more efficient. And then it's like, okay, now let's try again. But it's just like a lot of testing, iteration, looking at all these different, you know, scenarios and saying, okay, if it passed the mustard at that point, now you feel a little bit more comfortable moving forward. Whereas if you just were to code it and migrate it up to production, everything's going to break, you know, because you're not really, you're not thinking about what's going to happen. So.
Absolutely. And, you know, you know, there's much to be said in living in the moment, but also you got to plan for the future.
Definitely. Great advice, really. So, George, again, we really appreciate your time. Again, like I said, I really admire you guys and the commitment you have to the CRE community as a whole and the advice you shared during this podcast. But just to round out the podcast, what we typically do is we like to have people contribute something to the commercial real estate treasure chest. It's a repository of resources that we make available to our audience. And, you know, people have contributed, you know, Excel spreadsheets, they've contributed helpful PDFs and, you know, whatever else. And so I just wanted to reach out and ask, what are you willing to contribute today?
You know, two things. I can, you know, one of the things I would definitely do is, you know, I can definitely send a couple of underwriting spreadsheets that might be of interest, that go pretty in depth. And, you know, and it goes back to what you're saying, you know, the assumptions that people make on a lot of the OMs and offering memorandums or investment proposals, they're, you know, I can change an investment from one that I don't like to one that looks amazing just by changing one assumption and in Argus. And, you know, so I like to use a lot of the Excels. I change them, I put them in, I play with it and really try and take a look at that. That's number one. Number two is also then, I would say, you know, definitely our podcast or website with my business partner, Joe Killinger. It is, you know, there are, well, I'm not sure how many now, but over 100 videos and podcasts geared specifically toward first-time investors and people wanting to get into the real estate industry on the transactional side, on the brokerage side.
That's amazing. Yeah. And I'll echo that as well. Like I've watched a lot of your guys' content. It is super informational, super helpful. And you guys, you can tell you come from a giving heart and you really care about helping other people in their career, and both on the brokerage side and the investment side. So if you guys haven't done that already, definitely check them out. We'll include the links in the description below if you're watching this on YouTube, and if you're watching this on an Apple podcast or something like some other medium, we'll include that in the description as well. So.
Yeah, and George, I want to say thank you. We really appreciate you sharing your story and all the knowledge from this. I know myself, I've learned a lot so far, and but if someone else wanted to reach out to you and to learn more, is there a particular contact way that you'd like them to reach out to you guys?
Easiest, best way, and fastest response for me is typically email. And, you know, it's pretty simple and easy. GPINO, kind of like the wine, but no T. So at CBI commercial. So at Charlie Bravo India and then the word commercial.com.
That's awesome. Do you put that on your business card? It's like Pino without the T.
Yeah.
No, I got so many questions about, just like the wine, Pino. Okay, I'm like, well, not quite, without the T.
The T, yeah.
It's one of those rare short Italian names.
Mm-hmm. Yeah. So my mom's Italian. It's Bigozzo is her last name. So, so it's double Z and everything. Yep. So, well, cool, man. Well, again,
thank you, Raphael and Jeff.
Oh, yeah. No, we really appreciate you coming on. As always, like I said, you did provide a ton of value to our audience. If you guys are watching this on YouTube, I would greatly appreciate if you can like, subscribe to the channel. It helps the YouTube algorithm, ensures more and more people can hear this message. If you guys are watching this on it or listening to this on an Apple podcast, Spotify, whatever podcast format you're listening on, please leave us a 5-star review. We've seen a significant uptick in our downloads as a result of you guys leaving reviews. So again, please do so, and we really would appreciate it. So thanks again for tuning in, and we'll see you all next time.